brings us to our trending topic for the week, our question of the week, and that is this perception of active trading and investing versus passive trading and investing. And so, um, one, which one are you, or which one would you consider? And two, what is the better approach, and is one better than the other?
Well, I mean, so active investing and passive investing, by definition, passive investing means you put your money somewhere and it grows and you don't have to do anything. And so passive investing might be investing in mutual funds, definitely bonds, certificate of deposits, different things like that, where the risk is almost nil and you're guaranteed some minimal amount of growth. What else? Perhaps money markets. Those are all examples of passive investing. Active investing is where you have to increase your knowledge about what's going on. You have to increase your activity. You're actually kind of controlling your own destiny. And you could hire people to be active investors on your behalf, or you can, take that on yourself. And then I would say that there's different degrees of active investing, Sip. There's some degrees where and it depends on what investment vehicles you decide to choose, but some active investing um, is more active and has a higher potential for gains, but you have to be even more involved with your computer and then or with your trading platform. And then there's less active. And for me, the answer is not just what type of returns you can get, but what type of returns you can get as a function of the effort you must put in. So I like to think of it as almost being an efficient trader, right? Efficiency is always a definition of how much you have to put in to get a certain amount out. And so you can see what is the most efficient, because I actually value my time, like you were saying. I would rather be walking on the beach or doing some of my passions. I've got a couple of passions that are career oriented. I've got a couple of personal passions. For the most part, since 2005, I retired from the workforce. So, last thing I wanted to do was create another job. And so, one thing that's really important is if somebody wants to enter into this realm of active investing, that they look at these different aspects and not just at the potential rewards. Because sometimes when you look at the potential rewards and you pick up a type of investing that you've decided, I'm going to learn, I'm going to master, when it comes down to it and you have learned it and you're starting to do it, you realize, boy, the amount of effort I have to put into this is doesn't allow me to have a life. Day traders are known for this. Day traders are known for burning out after 6 months to a year. Just like the old floor traders. People who could last more than a couple of years as a floor trader were far and few between. Same with day traders. So I always hear newbies come to me and say, "Do you teach day trading?" I mean, not really, because day trading, I really want to see you doing this. For me, it's a marathon, not a race.
I think the marathon race analogy is spot on, especially in a day and age now where there's so many different things to invest in, right? And it's
Hmm.
easier than ever given the mobile components, the speed, and so I guess my follow up question would be: do options make it easier for you to be a little bit hands off, a little bit more risk reward? I'm gonna I'm gonna bet 20 to try and make 27, but I can only lose 3%. Like this type of approach where, hey, um, I'm gonna make 3% and I'm okay with that because next week I can make 3%. The week after that I can make 3%. I might lose 1%, but one can sleep at night easier knowing that there's a reward and there's a risk.
Well, options are these, I mean, they've got a complexity to them. they're not as simple as people make them out to be. And they do get a little bit of a bad rap because, in one way that we use them, in a leveraged way, they can be quite risky because you are leveraging. In other words, if a stock goes up $1, the option is positioned to go up quite a large amount based on the stock going up just a little amount. But what people don't think about is this opposite is true. If you use that same leverage component and the stock goes down a little bit, your option could quickly wipe you out. So people perceive options as these very risky instruments, but that's one out of many ways that they can be used. I mean, the way that big money, the folks that actually have big enough purses that they can move the markets, the way that they use options is to hedge against risk. And so what they like to do is they like to use options because options allow you to lock in buying and selling prices. And so they'll use options not as leverage instruments, but as ways to lock in buying and selling prices to remove risk. So, for instance, if something is going to start dropping in value, you want to lock in a selling price so that it automatically sells. And an option will allow us that ability without fail versus, say, for instance, a limit sell order, which may or may not fill depending on how fast the price is dropping, right? The options are a passive way to really control risk. And that's how I teach my folks to use them. We use them as strictly risk stopping, risk minimizing vehicles rather than really cranking up on the leverage component of them. And so, yeah, options I think are fantastic. What I sometimes get confused with is people who come to me and say, can you compare and contrast, for instance, buying gold and silver versus investing with options? And it's like, well, I don't know. Can you compare and contrast an apricot with a watermelon? One of them is buying a precious metal and holding it. And another one is doing active investing versus, usually buying a precious metal is more of like passive investing. And, with an option, it's a whole different focus. And it's not only an active investment that you're participating in, but it's, I almost feel like those questions are coming from a very narrow focused idea about risk, right? Or about reward, like which one can I make more money on? But again, you're missing the whole point of the discussion, which is effort, how much effort do I have to put in to trade each one? What's the risk picture of trading each one? Those are more nuanced topics than can you just compare and contrast investing in gold versus selling options.